I wanted to do a second video here in Venice Beach, but this time just walking through the neighborhood here and taking a look at what's going on, guys. Like, is the situation over here as bad as it used to be? Because so far, after spending a little more time here, I feel like it's not, you know? Like, I have not even seen one single homeless tent since I've been in Venice Beach, which is kind of crazy because you still see them by the beach and stuff in certain areas and things like that. But honestly, I haven't seen anything. So it seems like the enforcement that they have put into place around here, they're really being held accountable and really enforcing it, which is kind of a surprise, you know, because it seems like these days local cities and governments make all sorts of rules and laws against everything and they never enforce any of it. But it looks like people here are getting fed up enough with it that they are. So that's a good sign, I would say. Now, the first thing today is real estate investors in Australia are starting to pull out of the housing market there due to high interest rates. And the reason I wanted to cover this is because I feel like the same dynamic is happening here now or will happen in the near future, because these interest rates make it impossible to turn a profit on a rental property right now. When you're looking at the carrying costs of a property, especially here in the United States, at these rates and these prices, there's no profit left to be made. So why would anybody buy one of these investment properties? Well, in Australia, you're seeing a massive sell-off of rental properties from investors. And I'll get into a little bit later of why that's actually a problem. Now, this is out of the Queensland area over in Australia, and a company called PopTrack Research, they've been tracking the real estate market over there, and what they found was in 1 month, you had 8% of all home sales be investors selling their homes, and then the following month after that, it was 29.5% of all home sales that took place were from real estate investors unloading their properties. And apparently this is the biggest investor sell-off throughout all of the states that they have over there. So basically what's happening is, because it's becoming an impossibility to turn a profit, you have a bunch of landlords saying, you know what, I'm done, let's just sell the place. And what this is starting to suggest is, now with interest rates being significantly higher, and along with all the carrying costs that you have to deal with when you own real estate, it's putting financial pressure on these investors and even maybe negatively affecting their cash flow to the point where they're ready to sell. Now listen to this quote from this story. What's concerning is investor sentiment is very poor. Investors are a big pathway to building homes and a long-term solution to the rental crisis. We need a really strong investor component in the market to facilitate new supply coming in. Now, this is why investors selling off and not having an interest in investing is a problem right now, guys, because I know that a lot of people like to demonize real estate investors when a lot of people cannot get their hands on their own property to live in right now. But the fact of the matter is, where the demand is highest, whether it comes from real estate investors or regular home buyers, is typically where home builders start looking at building new homes. And this applies here in the US, which is why I wanted to cover this story, because the dynamic here applies everywhere. And so if you have an area that's essentially dying and investors can't turn a profit and they're no longer interested in being in the area, well, what do you think is going to happen with home building? It's probably going to come to a standstill. You're not going to have any developers interested in putting new developments there because no one wants to be here. We don't have investors that want to buy, and the regular home buyers aren't buying because they can't afford it. So we're not going to build here. So this is a bad thing, actually, in the end, when investors are saying they've had enough, because it's going to have an economic downturn effect on the area in general. Now, of course, it's not all bad news when you have investors going through a sell-off in any given area, because that gives regular home buyers a chance to step in and buy those properties. But obviously the problem is, right now, home buyers are facing some of the same problems that investors are in terms of affordability, and does this even make any sense? Because yeah, a regular buyer doesn't have to turn a profit on that place, but they also need to be able to afford all the expenses and the carrying costs and with where prices and rates are at today, that's just not the case for many folks, unfortunately. And the home building industry has some major headwinds to deal with right now, just facing their own problems, and that is they have a labor shortage. Now, if you go by the traditional stats, they estimate that the US is short about 4.3 million homes right now to meet the current demand, which sounds like way too much to me, especially when you consider that all the existing real estate that we have is going to come up for sale within the next 10-15 years. Now, what happened is during the Great Recession, there was about 1.5 million construction jobs that were lost, and a lot of home builders went out of business during those days. And even to this day, the construction industry has not rebounded to where it was during this time. And so basically, they have fewer workers than ever trying to keep up with demand of building all these homes, and it's taking longer than ever to build these homes. In 2022, it took an average of 8.3 months to build a single family home, and that's the longest average since the Census Bureau started collecting data back in 1971. So it is taking forever to build these houses, guys, and obviously that's not a good thing right now when people need a place to live and there's demand for housing in a certain given area, but there's no listings for sale. This is a 3-bedroom, 2-bath apartment that is for rent that they're currently asking about $6,400 per month, and this is probably like less than a 10-minute walk to the beach, so it's pretty close to the beach, and that's pretty much on par with what rentals like this in Miami are going for these days. So that's what I keep telling you guys, like, it's pretty much just as expensive in Miami now as it is here. Here we have a house for sale, 3-bedroom, 3-bathroom for $2.2 million, and this house has not been sold since 2004, so it's not a flip or anything like that. They bought it back then for only $500,000, which I'm sure back then seemed like a lot of money, but today that's pretty much the average home price, and now they're asking $2.2 million. I don't know if they'll get it, but they're going to make a killing if they do, and their current property tax bill is about $11,000 a year. And one of the big problems, besides just the timeline of not being able to build the housing fast enough, is the longer it takes to build a house, the more expensive building that house becomes. And guess what? The final cost of building that house is ultimately passed along to the buyer. So that's a problem when it comes to housing affordability in general, because if they could turn these houses around a little bit faster, it would be better for the price of new construction homes. But instead, people are having to wait longer than ever, and that is adding to the price. Ooh, look at this place, totally burned out. Whew. It's pretty bad. So it's estimated at the moment that the construction industry needs to add about 723,000 new jobs per year in order to keep up with the demand for new construction, guys. So that is a tremendous amount of people that they need right now to fill their shoes. And to put that into perspective, so far this year, there have been 350,000 construction jobs available every month on average. But the problem is they're not filling those jobs. They're not getting people to work. So far, guys, I have to say, like, walking around the Venice Beach neighborhood here just feels like walking around any other average neighborhood for the most part. Doesn't feel super unsafe. You know, I had this idea after seeing all the YouTube videos I've seen about this area that it was going to be super ghetto and pretty dangerous, but that really hasn't been the case at all. And I'm not trying to like pump up California or make it look better than it really is. I'm just sharing with you what I'm seeing here and you know, my impression after not being here for about 5 years. Now, one of the reasons construction also is running short on labor is because many construction workers are basically aging out of the business. You know, you have nearly a quarter of construction workers right now over the age of 55, and when they retire, there's no one to take their place. So these job openings keep piling up, but they're not filling the positions nearly at the rate that they need to. And part of the problem with all of this is this whole notion and mentality that we have in today's society that, oh, every kid needs to go to college, everybody needs to get a degree, everybody needs to go into massive debt in order to make any sort of living. Whereas in the past, you would have, you know, grandpa was a construction worker, and then the son's a construction worker, and his son after that was a construction worker. Same thing with all the other trades like plumbing and electricity, different things like that. It was pretty traditional and common for the kids to follow their parents' footsteps. And then of course they go on to blame the fact that immigration is slowing down, at least legal immigration, and that's part of the reason why you don't see as many construction workers anymore. But I think we can all agree that most Americans don't have a problem with legal immigration. It's all the illegal immigration that a lot of people are upset about, because a lot of these construction managers are saying that our industry is 30% immigrants, so with a lower pool of immigrants coming in, it's harder to fill all the positions. And then there's another layer to this as well, where today it's not cool to be a construction worker or a plumber or an electrician. Like, doing any sort of manual labor is kind of frowned upon these days as a successful career path. And a lot of people unfortunately think that they're just above it, right? That they feel like they're better than that and shouldn't be doing something like that for a living. Whereas in the past, this was just a common way people made, and it was a respectable job for many years. I personally think that there needs to be more of an incentive, especially students, to be able to jump directly into the workforce and, you know, start being trained. Like, if you don't want to go to college, but you want to start working right out of high school and have a shot at having a good job, then there should be apprenticeships available for these different things in order to get people moving and working instead of staying at home in mom and dad's basement trying to figure out what they want to do for the rest of their lives, you know? But because school pushes more school way too much, then it gives these young people this confliction where they don't really know what to do. They feel like they should go to school, but it's obviously not for everyone. I didn't go to college, and to me, it's one of the best decisions I ever made in my life. I don't have any student loan debt. I don't owe anybody any money, and I wanted to be an entrepreneur anyway. So going to college wouldn't have really done anything for me besides waste mine or my parents' money. So we'll see if we can get a hold of this whole labor problem that we typically have here in the US, and it's really starting to have its effect on things, guys. Like, this ultimately increases inflation. When you don't have enough people to do these jobs, you know, the cost to do a job comes at a premium, and we're all paying for it right now. And until that changes, you know, it's going to keep the cost to build a new home very expensive. Now, another thing that happened this week is we got the new inflation numbers in, and it went up slightly compared to June's numbers. In June, we had a 3% CPI reading, and now in July, it came out to 3.2%. Now, supposedly the betting markets are starting to think there's only going to be a 10% chance that the Fed will increase its rates at the next meeting in September. 10% chance, guys. Now, to me, this story sounds pretty familiar. We've heard many times during the past year and a half where the betting markets and the stock market people thought that the Fed was going to be done with their rate hikes, and surprise, surprise, they continued with the rate hikes. But they're still betting that there's a 28% chance that there will be an interest rate hike in November. And they're already predicting that the Fed's going to start cutting rates by spring of 2024, guys. Now, I don't know. To me, this sounds very optimistic, especially since we got a higher CPI reading than last month. And the other thing that these guys are not thinking about, or maybe considering, is the potential for, as soon as the Fed lets off the gas with these rate hikes, right? As soon as they start reversing things, then you're likely to see inflation start ticking back up, especially for reasons that I just covered. You know, housing is such a big contributor to inflation in terms of the cost of rent, the cost to build a new home, the cost to buy a home today. And if the Fed eases up on interest rates too soon, then essentially inflation can be free to run wild once again. Look at this giant agave plant, guys. This thing is so huge. To give you a perspective, it is bigger than me. I've never seen one this big before. So if the Fed reverses its rate policy too soon, then they may have to go back to raising interest rates again if inflation starts raging, and they'll be right back where they started, essentially losing any progress that they made, which is kind of the danger of giving up on their fight on inflation too soon. So it's going to be really interesting to see how this is going to play out over the next year or two. Now, here's the last thing I want to leave you guys with. Now, you already probably saw my video a couple days ago about how people are borrowing against their homes like crazy right now, taking advantage of all these HELOC loans. Well, there was a story out today about how part of the reason that the economy is doing so well right now, or supposedly doing so well, is because all of these people that are equity rich are able to tap into it and actually use these loans to fuel their spending. Whether that's the right thing to do or not is besides the point, but people are doing it. So if you take a look at this chart, you can see how much credit card debt has been going up recently, but the home equity loans were going down up until about 2020, when people realized they had a ton of equity available and decided, hey, we are going to start borrowing this again. And you can clearly see it's starting to go back up. And it's obviously not near the levels yet where it was during the 2008 housing market crash, as we can clearly see on this chart, but it's also going in the wrong direction. It's starting to go back up again. So basically the idea here with this is that because people are so equity rich, then this is going to be the source of money for people to survive during this time of higher expenses and a higher cost of living, because so many people are equity rich. And we can see it in that chart that people are borrowing more money against their homes right now. That is a fact. That is not just something that I'm pulling out of the sky right now. But how long is that going to last for, guys? Because if you take a look at this chart of all of the homeowners' equity, the total value of home equity, going back to 1990, what do you notice? During these big booms in the market, you get the boom of the value of your home going up, and then it drops when things start to correct. And we see this going all the way back to 1990, and obviously the largest example of it is during the 2008 market crash, when it went down substantially. Well, you can already see right now that things are moving in a downward direction. And here's the thing, too much borrowing and too much leverage is part of what led to the huge Great Recession we had back in 2008. But it seems like people have not learned the lesson, and we saw in the earlier chart how much credit card debt has been spiking. It's over $1 trillion now, the highest mark ever. And now that that's kind of getting maxed out, people are turning to the value of their homes for money. Now this street is the first street that I've seen so far walking down here where you have a few of these camper vans and all this stuff parked on the sidewalk, and this has been a telltale sign of homeless activity. But at the same time, at least it's not tents on the street, right? But this seems to be the new way that they're pushing people into, you know, living like this. And I'm sure there's people living in these cars back here. And listen, guys, that's just the way it is. But I think overall, you're seeing things start to turn around over here. At least that's been my impression. Now here's something funny too. One of the reasons or theories of why people are turning to home equity like this is because credit card interest rates are just too high, and you can get a lower interest rate with borrowing against your home. Like, how foolish is that, guys? Who thinks that's a good idea to borrow against your home because you're worried about how much interest you're going to pay on the credit card? Like, newsflash, you can borrow money on the credit card and not lose your home if you don't pay. So I don't know what people are thinking that this is a good idea. More likely the fact that maybe their credit cards are actually maxed out and they can't get more money out of the credit cards, and now turning to home equity as the next place to draw money from. But I guess people just never really learn, and everyone who's doing this is just gonna have to learn the hard way once again. Borrowing against your house in times of need, when you need money, when you're not able to keep up with the cost of living, has never really worked out well for anyone. So, but hey, you heard it here. I warned you guys that this is something that people are doing, and you can prevent yourself from falling into these traps, you know? Make more money, get a second job, guys, move to a more affordable area, do something else besides this, because this is just a way to end yourself in financial ruin and lose any progress you made as a homeowner. If you guys enjoyed this video, make sure you subscribe to the channel, and if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.